Hi, I'm Natalie Schaffner and I host the Candlelight Trading Live Trading Room. I've prepared a presentation for you regarding risk management and how to stay alive in the markets, and I hope that you enjoy it. But first, let's read our disclaimer. Stocks, options, and futures trading have large potential reward, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the stock, options, and futures markets. Don't trade with money that you cannot afford to lose. This trade room is neither a solicitation nor an offer to buy or sell futures and/or derivatives. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this presentation or in the trade room. The past performance of any trading system or methodology is not necessarily indicative of future results. All right, now on to our presentation. How to stay alive in the markets. We all know that market conditions vary and thus trading conditions vary. You know, the days when the market just follows through with nearly every trade you take, and even the quote-unquote bad entries make you money. Then there are the days that no matter what you do, you can't seem to catch a winner. And unfortunately, those are the days that take most traders out of the game. These are the days that traders give back much more than what they make on a typical winning day. We know that all trades cannot be winning trades. In fact, that's a fact of life. Trading incurs losses. The market is a battlefield. So how can we survive the losses and be able to stay overall profitable? Well, it's all about risk management. Some of the common mistakes that all traders make, and I've made them myself many times, is one, letting our losses get so big that when a winning trade sets up, you're unable to participate because you've already lost more than you can afford to lose for that day. Have you ever hesitated to take a trade because the last few trades stopped you out, only to see that the one that you didn't take was the one to make the big move? I know I've done that lots of times. Have you ever entered a trade that is moving in your direction? You had a little profit, and now you tighten your stop up too much due to fear of it turning into yet another loser, only to have it stop you out and then continue in your direction? Have you chased a trade because you missed the entry and you didn't want to miss out? So that forces you to either have too much risk on the table or risk that it stops you out because your stop is too tight. I've made all of these mistakes many times myself. All traders do at some point, and at some point we have to learn how we can avoid them. Keep your losses small and let your winners run. How many times have we all heard this saying? Everybody says it, but how do we do it? Well, in the trading room, we learn to follow institutional money flow to help to identify areas where the market will likely turn, thus taking more high probability trades. By understanding how the market works and following institutional money flow, it allows us to identify greater areas of opportunity. Also, by identifying value, we have a higher probability of reaching our targeted areas and thus can let our winners run. In the trading room, I also used Fibonacci areas to look for confluence in both my entries and in my targets, which give me greater confidence in staying in my trades. We also work to identify areas where it is best not to trade. Patience pays off in the market. Sometimes the best position is no position. Most importantly, we know that we have to get out once we know we are wrong. By understanding and using order flow, we can tell right away if we're wrong in our trade, and this allows us to get out quickly, usually with a relatively small loss or sometimes even a small win. So, let's take a look at some stats. Some of you may have seen the recent YouTube video that I put out highlighting the trades that I took in the trading room on Monday, March 26th, just a couple of days ago. Let's take a look at these stats. You'll see here that I took a total of 8 trades that day. All of those trades were in the Dow, which offers just a nice $5 per tick risk, ideal for smaller accounts. I like to focus on offering opportunities in the room for people with smaller accounts of less than $5,000 because I know that that's probably what the majority of retail traders are trading with. Once again, I know this because I was there myself. You'll also see our percent of profitable trades for the day was 62.5%. Just a little bit over 50%. Certainly not perfection by any means. But take a look at the average winning trade. $248 compared with the average losing trade size of $35. That's more than a 7-to-1 reward to risk ratio. And so the results were a net profit of $1,135 for the day. Again, this was trading just one contract of the Dow for each trade. Now, not all days can be as nice as this one, so let's take a look at the stats from the next day, Tuesday, March 27th. You'll see that on this day, I took more trades, 17 trades in the trade room, and my win rate was even worse, just 35.29%, way less than perfect. But let's take a look at the average winning trade size. The average winning trade size was $144.17 versus the average losing trade size, which was $50.91. That's still nearly a 3-to-1 reward to risk ratio. And this ended the day with a $305 net profit. Even taking into account commissions, it was a profitable day. Certainly not an $1,100 day like the day before, but we stay alive and we live to trade another day and still make a profit. You'll notice that the largest losing trade in that day was only $75, where the largest winning trade in that day was $450. I don't claim to be a perfect trader, but is anyone? But what I have learned to do is how to control risk, and I can help teach you how to do that as well. Every day in the trading room, I look for areas where I expect the market to go, and once there, I have a plan laid out for what I will do based on what happens once it gets there. I typically have a plan for both directions. The market is always right. I can't control what the market will do, but I can control when and where I will participate and how much I'm willing to put at risk to see if I'm correct. And if I'm wrong, I get out. I'm not a certified investment advisor, and therefore I cannot or will not give you investment advice. I can, however, show you and teach you what I do and help you learn from that so you can then make your own trading decisions. If you want to learn more about the Candlelight Trading Room, please visit www.candlelighttrading.com.
The regular monthly subscription rate for the room is $197 per month, but you can purchase a quarterly membership, which will automatically save you $100 each quarter. Either way, enter the discount code CANDLE50 at checkout and you receive $50 off either a monthly or a quarterly membership.
Let me help you become a more successful trader. Thank you and have a great day. I hope to see you in the trading room soon.